Listen, I need your full attention for the next few minutes, because what I'm about to reveal could be the difference between watching your retirement dreams slip away and actually building the financial freedom you deserve. Right now, while everyone else is paralyzed by fear and uncertainty, a handful of intelligent investors are making strategic moves into 5 specific companies that have the potential to multiply their wealth several times over in the coming years. And before you think this is just another hype video making wild promises, let me be crystal clear. I'm not here to sell you dreams. I'm here to show you real opportunities backed by solid fundamentals, actual market data, and business models that make sense. This is about building genuine wealth the right way. Now, before we go any further, do yourself a favor and hit that subscribe button for Finance Flash. We're creating a movement here of serious investors who are tired of the fluff and ready for honest, actionable market analysis. And tap that notification bell because the content we're releasing could genuinely transform how you think about investing. Trust me, you don't want to miss what's coming next. All right. Let's dive straight into opportunity number 1. We're talking about Zscaler, which trades under the ticker symbol ZS. Now I get it, cybersecurity doesn't exactly get your heart racing like some hot new tech stock, but stay with me because the numbers behind this company are absolutely staggering. Here's a reality check for you. Right now, roughly 2/3 of Fortune 500 companies experience cyber attacks every single year. And these aren't minor inconveniences. We're talking about attacks that cost companies an average of $5 million in damages. When you understand that number, you start to realize why cybersecurity budgets are basically untouchable, even when companies are slashing expenses left and right. But here's where it gets really interesting. Cybersecurity spending currently makes up about 7% of total IT budgets across corporations, and that percentage is climbing at approximately 12% every year. However, and this is crucial, not every cybersecurity solution is growing at the same pace. Traditional firewalls and older security systems are only growing around 5 to 11% annually. Meanwhile, cloud security and secure access service edge solutions are absolutely exploding with growth rates hitting 18% per year. Want to know which segment Zscaler dominates? Exactly that high growth area. More than 10 years ago, Zscaler completely revolutionized the cybersecurity industry by moving away from outdated network architecture security and pioneering something called Zero Trust architecture. Today, Zero Trust is the gold standard across the industry, but Zscaler has maintained its competitive advantage with over 50 million users relying on their platform every single day. Their revenue is growing at 21%, which puts them second highest among all their competitors. And when you look at their valuation metrics, specifically their price-to-earnings ratio adjusted for growth, they're trading at one of the most attractive levels in the entire cybersecurity sector. This stock could literally double in value and still be more affordable than competitors like CrowdStrike or Cloudflare. Now, let me break down what this actually means for your money in practical terms, because this is where most investment channels completely miss the mark. I've seen videos claiming you can turn $75 into full-time income. That's not just misleading, it's irresponsible and potentially harmful to people's financial futures. Those kinds of claims would require returns exceeding 100% every single year for a decade. That's not investing, that's pure fantasy. If you want legitimate results that can actually generate income or secure your retirement, you need a realistic strategy. Here's how it works with a company like Zscaler. If ZS maintains revenue growth in the 15 to 18% range, that translates into 25% annual returns, which matches their recent performance. Investing just $1,000 per year for 20 years builds a portfolio worth over $430,000. At that point, you transition into a more conservative portfolio mix of stocks and bonds generating around 10% returns, and that produces $43,000 in yearly income. That's real salary replacement. Is this going to happen overnight? Absolutely not. But unlike those ridiculous promises floating around, this is actually achievable with discipline and patience. Quick pause here. Drop a comment below and tell me which stock on this list interests you most. Seriously, I read every comment, and your engagement helps me understand what content serves you best. And if you're getting value from this breakdown, smash that like button so the algorithm pushes this to more people who need to see it. Moving to opportunity number 2, we have Astera Labs, trading under ticker ALAB. This stock has rocketed over 100% since early last year, and there's a very specific driver behind that movement. The massive expansion in artificial intelligence data centers has created serious supply constraints, and networking equipment has become one of the biggest bottlenecks in the entire infrastructure build-out. The market for routers and switches that manage data center traffic is projected to grow at over 14% annually, reaching $119 billion by 2033. Astera provides intelligent connectivity platforms with high-speed optimization software that AI operations desperately need right now. They connect switches to switches and switches to servers across entire data center operations. But here's their secret weapon. Amazon owns 277,000 shares of Astera, worth about $47 million. Now that's only about 1.6% ownership, but it tells you something extremely important. Amazon is investing $15 billion per year on infrastructure, which is double what they spent in 2023. Their CEO recently stated they could be growing even faster if not for capacity constraints, specifically mentioning networking equipment. This is exactly why Astera doubled their revenue last year, jumping 188% to $827 million, and projections show another 42% growth this year, pushing them over $1 billion in total sales. If you can capture even a 20 to 40% annual growth trajectory here and maintain 30% annualized returns, you're looking at replacing your income in 15 years by investing just $1,500 annually. That's $125 per month on a 30% annual growth rate. You build that same $430,000 portfolio, but you accomplish it 5 years faster than the previous example. Now we're getting into territory where stocks could potentially get you to financial independence in 10 years instead of 15 or 20. Next up is Alibaba Holdings, ticker BABA, which surged 73% last year. And there's a major catalyst here that most American investors are completely missing. The recent policy changes allowing Nvidia chips exports to China fundamentally changed the game for the world's second largest economy. Combined with China's power generation capacity, which is nearly triple what we have in the United States, China could leapfrog ahead in certain artificial intelligence applications. Power generation has been a massive limiting factor for AI development here in America. Alibaba isn't just the e-commerce and cloud computing giant in China. Their Qwen AI model is one of the most sophisticated available, competing directly with GPT, Grok, and Claude. Sales growth is expected around 10% over the next year. At just 2.4 times price to sales, the stock is incredibly undervalued. If valuation moves back to 4 times sales and revenue grows at 15%, you're looking at 20% annual returns over the next decade. That's 6 times your money. Before I move to the next opportunity, I want you to share this video with someone who needs this information. All right. Stock number 4 is SoundHound AI, trading under ticker SOUND. This represents next-generation AI in action. SoundHound processes speech directly into AI, delivering speed and accuracy far beyond traditional voice assistants. They've secured partnerships with Hyundai, Stellantis, Kia, Fiat, White Castle, and Church's Chicken. The voice AI market is valued at $160 billion. SoundHound's projected revenue this year is only $168 million. Even capturing 5% of that market would mean $8 billion in annual revenue. Just returning to last year's high would double the stock from current levels. Now for the 5th and final opportunity, we're talking about the iShares Ethereum Trust, ticker ETH. This fund provides exposure to Ethereum without directly holding cryptocurrency. Ethereum is becoming the foundation of tokenized finance. Tokenized stocks grew by 2,500% last year. Nasdaq, JP Morgan, and Robinhood are already moving in this direction. Some forecasts project Ethereum reaching $62,000, which could push this fund nearly 20 times higher. Used correctly, this has the potential to replace income faster than traditional assets. The bottom line is this: These 5 opportunities represent real growth across cybersecurity, AI infrastructure, global markets, voice AI, and the future of finance. This isn't about luck, it's about having a plan and executing it with discipline. Now I want to hear from you. Which of these stocks interests you most? And if this breakdown gave you real value, make sure you're subscribed to Finance Flash. Hit the notification bell, share this video, and stay focused on building the financial future you deserve.